Good day, everyone. This is Ken here from the Dyslexic Investor, and wow, what another day starting of the fourth quarter. You see it all over the news right now, and on CNBC and so forth. The market is down about 400 some odd plus points in the futures. Second day, a lot of negative press is coming out. People are saying the economy is coming to an end. Everything's slowing. There are all these various articles. You can just look anywhere. Bank of America Merrill Lynch says S&P isn't heading into any higher into the end of the year. The firm's 2,900 year-end S&P target is about 1% below where the index is currently trading. So they're basically saying we ain't going anywhere higher, only lower. So let's go ahead and jump into the charts here. You kind of see here that is a Hello Kitty of a down day here. That is a pretty big red candle. It's not as big as the one a couple months ago because this is a substantial one. Again, looking for support around the 200 moving average here, which is the little white dotted lines here. This could be support. As you've seen multiple times, it has broken through it very sharply and then bouncing back up. You can see that multiple times over the past 4 or 5 months. We can kind of see here in the breakdown of December of last year, it totally kind of was basically trading below it and just crashed right through it. So again, the low 23.16 of last December. And then we're at 29, so the Merrill Lynch is saying around 2,900-ish. So they're saying right about here, year's end. What is their prediction? What does that mean? I don't know. That doesn't affect what we're trying to do and trying to predict. Again, this is all predictions. But as of today, the market is down quite some bit here. So we're going to go look at some safety stocks, which I actually mentioned last night. So we're going to look at Coca-Cola. Let's see here. Yeah, this is down as well, but this is going to be due to other market needs. So as the Coke goes down, it's going to go down. This is a stock that can be resilient over the more of a longer term than the other fundamental stocks like your technology stocks. And of course, we're going to do GLD. We're going to look at some gold here. This is the Spider Gold Trust. Of course, this is just up slightly today, about 1.5%, a little over just over 1%, and it's making its way higher. Here again, people are going to kind of tends to move to gold to be more of a safety asset, and if the likelihood of a recession would hit or anything would affect that. And then we're going to do at PG. Procter Gamble. Everyone needs to buy tissues and stuff, toilet paper and toothpaste. Again, this is down to almost 2%, which is substantial, but in the hindsight of things, everything's basically down 1% to 2% overall. But these are the ones that hold out. After the smoke clears, these are the ones that are going to continue to push higher. Because again, the way the market works, if the overall indexes will push these down, because there's so many ETFs that are just pushing everything down. They're tied to, they're leveraged to so many different things. PG's probably in multiple ETFs, and they're being pushed down to other lows, and that in sense is pushing it down as well. But after it settles and things like that, those will perform slightly better. I'm trying to see what else I see popping off here that's doing good. Of course, your Johnson & Johnson. Johnson & Johnson, great safety stock. Everyone needs their medicine. Everyone needs their Band-Aids. Everyone needs all that fun stuff for that. And then, of course, TLT. We got the Treasury Bonds here. They're the inverse of the equity markets, so they're going to be pushing higher. This might be a fantastic buying opportunity for TLT to go from like 143 to 150-ish potentially, if we can continue to see some influx. And of course, you can always just get the VIX, the VIX, or what I recently bought, the VZZ. This is the short-term VIX. Why isn't it loading? I'm waiting for data. That means it's slow. Is it VXX? Sorry, VXX. There we go. I bought these yesterday at like $24. Now they're $26.39. Nice little move there. These I'm looking to probably get out probably the end of today or the end of tomorrow to see how things continue to deteriorate or start to level out. We'll just have to play from there. Some other bigger holdings that I see could be hitting issues, of course, are a lot of the technology guys. You have your Apple. It's only down 2.25%. Nothing crazy yet, but this, again, we're going to see how things go the next week or so and how things are moving, and hopefully we'll get some better answers moving forward. So closing thoughts and so forth, hoping for this to hold around the 28.75 level, potentially going slightly plus or minus 10 or 15 points lower or higher, or from there stopping here, honestly. But just using this kind of as a potential resistance. If that breaks, which most likely what you'll get is a dead cat bounce. So this is just going to bounce around a little bit and then potentially maybe go half up of this and then continue going down. So right now the trend is lower in my eyes and my charting analysis, and that's what I'm sticking to. Again, guys, thank you so much for watching. This is Ken from the Dyslexic Investor. Catch you guys on the flip side. Peace!